Good evening, all. It is Sunday night. Hope you had a great weekend. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter. We run a couple services. We run a swing trading service, which is published on a nightly basis. We run an ETF trader, which is published on a weekly basis that talks about different sectors, different ETFs, currencies, commodities, indexes, and so on. But this one is the free one, so it just gives you a taste of what we do. This is a chart of the S&P 500, S&P 500 on a 60-minute basis. Now, S&P 500 is something we watch all the time because it is the most major index. It's the one that's the most diversified 500 of the top stocks out there. So we watch this one quite a bit. This is a 60-minute chart to show you about the last month. And what I want you to notice over here is the fact that the market is not pulling back. The market does not like the short side anymore. We had a very nice, interesting pattern over here. We had a triple top, head and shoulders, whatever you want to call it. The market broke support, and we started going on the short side, and then we expected this bounce, and then it bounced right over here like clockwork, and then started coming back down. That's when we started looking at the short side. We started building our position very, very lightly, very lightly, about 10% of our money. That's about it. Now, as soon as it broke to the upside, we switched around and we went long. Why? Because the market is resisting the short side. This has been the story of the market since March. That is the strangest market I've ever seen personally. Here's a daily chart of the S&P 500. You can see how from March we've been inching up and inching up and inching up. No pullbacks, no pullbacks at all the way up, no pullbacks, no pullback, no pullback. All of a sudden over here we had to put a pullback, and look what resulted from it. Another very strong trend, then a very small pullback, and a very nice strong trend. Why is this happening? Why is there such buying out there? All the news that I'm reading is not good. I mean, for example, we just had a deficit estimates for come out this week, and they're estimating $9 trillion in deficit. It's an amazing deficit. The CBO, the Congress Budgetary Office, actually only estimated 7 trillion. But that's because they estimated that we're going to raise our taxes and that we are not going to pass cap and trade. We're not going to pass the health. So it is going to be around 9 trillion. As a percentage of GDP, we're going from about 40% up to 80%. It's a horrendous amount, and I don't see a whole lot of positive in it. But the market is going up. The market is going up. The market is going up. There's one more thing that we need to look at. This is another part of the equation. And here's TLT. TLT is the ETF that represents the long-term government bonds. And what I want you to look at over here is the fact that notice how the bonds went up, came down, and now prices, this represents prices, are going back up again. Why are these prices going back up again? Why are people buying our government bonds right now? It's not people that are buying. China hasn't shown up to the last couple of auctions. We are pumping $2 trillion into the open market right now. The Federal Reserve Board has $2 trillion on their balance sheet in open market securities that they're buying. They're supporting our government bonds, they're supporting our mortgages, they're supporting our stock market. By doing that, they're keeping everything up. They're keeping consumer confidence up, which is a good thing. I mean, I want consumer confidence to be up, but I don't want it to be fake. I want people to have jobs. I want people to I want unemployment to come down. I don't want people's wealth to be raised, but not this way. So right now we have bonds that may break resistance again. Now, if they break that 96, 92 level right over here, this could get really interesting because mortgage rates will come back down, which will refuel the real estate market. Which is a good thing by itself, but we're taking on debt to buy our own debt. And if I have a $10,000 credit card and I got another $10,000 credit card to pay off my $10,000 credit card, it does not mean that I'm wealthy. It means that I have more debt, which is of course interesting, interesting all by itself. Oil prices are going up. which is okay. You know, oil. If oil breaks that, this is USO. This is the ETF that represents oil. If we break that 40 15 level, you know, the oil could really start propelling forward. It's about the 72 $73 level on the oil itself. They don't correlate 100%, but they correlate pretty close, which is very good. So what are we investing in right now? What are we doing right now? Right now, what I'm doing is I'm looking at the real estate, because if bonds are coming up in price, which means the yield is going to go down, then I'm investing in real estate. Let me show you an example. I'm going to go back to the 60-minute chart, and here's a perfect example. Alexandria RE Equities 52.77, and we bought it right over here 52.77, and it went up. This is only a few days trade, but that's what I'm doing right now is a few days trade with the swing trading newsletter, because I'm not comfortable with holding anything long term at this point. A WRI, another one of those realty groups that were taken from the 1956 up to 2030. Now, they're not huge profits by any means. AIV, another one from 1080 out to the 1272. They're not huge profits, but they are consistent and they are frequent. And consistent, frequent profits are equal to large profits over the long term. If I make 2% every day, 2%, 2%, 2%, 2%, 2%, that's 10% per week, that's 40% a month, as an example. And that's what allows us to do that. The market itself does not really lend itself to long term trends. This is a 60-minute chart, but if I put it on a daily chart, you're seeing that we basically have one long term trend. So what's happening right now? Well, the biggest thing that I can see is that the Federal Reserve Board has a buy program that they're going into the open market and they're buying stuff. They're buying mortgages, they're buying treasuries, they're buying stock market. Now, they are buying everything. They extended their program from September up to October. So they're going to keep buying in the open market till October. Our debt ceiling, we're going to reach our debt ceiling by October. We are going to have about $12.1 trillion in debt, I think it is, and we're going to reach it pretty soon. Now, if we reach it, the Congress is going to have to raise our debt ceiling, which means we can no longer borrow money to propel our economy forward, or we're going to have to borrow more. That's all going to happen in October, which I think the market is going to start calculating in. Next week is going to be, this week coming up is going to be Labor Day week. This is the last week of vacations. People are going to come back around Labor Day, and we are going to see much better market moves after Labor Day itself. And that's what I'm looking forward to. The market, to me, is a little bit of a limbo right now, because I think people are buying because the market is going up. It's the same thing as people buying real estate when the real estate market was going up. People were buying real estate not because the prices made any sense, but because everybody's buying it. They didn't want to miss the boat. And that's exactly what we have right now with the stock market. People are buying. If you listen to any professional trader out there, they will tell you that, I don't believe in the market. I don't think the market should be going up. But guess what? The only way to trade is really on the long side, because the short side is not working. Anyway, if you are an investor or a trader, you have to pay attention to these things, because to me, this is a musical chairs, and eventually the music is going to stop. What are you going to do when the music stops? Do you have a plan? Do you have a chair that you're eyeing? Do you have a trade that you're eyeing? Do you have an exit strategy out of your position? All those things are things that you have to have ahead of time. Anyway, I'm done talking. Have a great week. Join our ETF trader. You can have a month-long free trial, or join our daily, our flagship, our swing trading for the daily trades that I just showed you. Have a great night, and I'll talk to you next week. Take care.